All right. If we start to violate, let's say 67.40, especially a daily close below 67.40, then you would anticipate a full gap fill back to 66.15 right here. This would be a gap fill if we get all the way back into it. All right. If we then violate and go below that, it opens the trap door for a potential retest of this low and this middle point of the parallel that had me getting so bullish about 2 weeks ago. And you can see again what a rally it's been on the S&P off those levels. But per Friday's gap up, that's really where we started to say, okay, start to look for a pullback on the S&P, and that's exactly what we've gotten here. All right, now let's talk dollar real quick. The US dollar isn't doing much, basically flattish on the day. We've had this pullback. Look at how great this resistance is on the US dollar. It really shows us how this zone, basically between 100 and 101.50, historically, look, going back even as far as 2015, this area was resistance, right? All along here. Okay. Then we broke out and it became all this support, right? Then we got back below it. And what did it become? Resistance again, all along here. And you're seeing price getting rejected back down. And I still think the dollar is going to ultimately go lower. I think that this war, historically, you've seen the dollar have a much bigger rally. The fact that the dollar had such a meager bounce in this conflict where people weren't running as heavily, countries weren't really jumping into the US dollar for the safe haven aspect, I think that's very telling about the future next year or two of the US dollar. All right. Next up, let's take a look at the SMH. So on Friday, we talked about this trend line here. This was a triple tap trend line. And again, I showed you guys how this replicated perfectly on Bitcoin and how this is something that occurs on many charts. They do a single tap and you get a small pullback, a double tap, a little bit of a bigger pullback, and usually the third tap of that, and you see a much bigger drawdown. And just to go into that Bitcoin chart, if we zoom out here and let's focus on the bigger time frame, and we take that high from 2017 and we drag it all the way up right here, it touches perfectly this high in 2021. And then look right into this, and you have that same formation. You have your first hit, small pullback, second hit, bigger pullback, third hit, bear market, right? And then we've come down here across the board. And so that's really replicating on the semiconductors, first tap, second tap, third tap. Again, it's not going to be a straight move, but in general, you would anticipate that this next drop is going to be the big one. And again, it doesn't mean, again, I want to stress this because I think people sometimes misinterpret they're wanting that instant gratification. It doesn't mean like, oh my God, the semis are going to crash today or tomorrow. It's like, all right, just like Bitcoin topped back in October of 2025, look at where we are now in March. There's the beginnings of a bigger move to the downside that will have plenty of bounces along the way. But just understand, you're likely topping out here on the semis for the longer term. I showed you a couple other factors here. If we go to the weekly chart, we can look at the weekly chart here and look at the 200 moving average. And I discussed how the extension move has literally been replicated here for now since 2020. The highest point from the 200 moving average, 103%, right? And then here you have the same sort of thing, and I'm doing it fast to just save time, but essentially 103%. And then right up here, we have this extension 103%. And so you have this max extension where it's almost like Napoleon getting too far away from his supplies. And ultimately, that's where the army has to, or the semiconductors are just pulled back to home base. They get too far away again from their supplies, just like Napoleon or any, in fact, in fairness, many, many other scenarios. Okay, so that's where we are right now on the semis. Now, on Friday, folks, remember I said I'm starting as of today to accumulate software stocks. Software stocks are beaten down. They are into major support levels. I said I'm shorting the semis and I'm buying software. Okay. Let's take a look at where some of these stand. One of them that I like is Adobe. You can see Adobe's holding steady right into this massive support on the weekly chart. We can go to the daily chart. You can see right here. Currently, Adobe's actually higher today. So look at the price here. I don't know if you guys can see it on your screens. It's probably small, but currently we're trading at 226.50 That's over $1 higher in the pre-market. And that's important because the S&P is still down. So common thought would be, well, S&P's down, all stocks are down. Wait a minute. The software stocks are showing relative strength. This is again a oversold into technical support scenario where we're likely going to see a bounce here in the software stocks. I generally expect to move back to about 250 on Adobe as first target. And then if it fills this gap, which I do think it could, 270 could be your upside target. So there's some decent upside. CRM, look at this big level on CRM, Salesforce. Again, this is the weekly chart. We can flip over to the daily chart. CRM is also up about $1 here in the pre-market. Now, listen, we'll see where it goes throughout the day. But again, look at how beaten up these things are relative to where the stock market is. And again, oversold short term, oversold longer term here, looking good. Same thing with Oracle. Oracle, again, filled this gap right here on Friday.